Hello, welcome to the channel. This is the weekly watch list. So just before we start, apologies to the elite members. Normally we do this as a webinar for the members and upload it on YouTube. Unfortunately, I've got to go out pretty soon. So I thought rather than wasting time, I'll just get the recording done and upload it, and then we'll do the webinar next week. So we've got a few things on the watch list. We've got US oil or crude oil. We've got euro dollar, dollar yen, euro New Zealand, pound Australian, dollar Swiss, NASDAQ 100, and the S&P 500. So we'll start here with euro dollar, then go to oil and go down the list from there. So euro dollar's had a huge run actually. I will admit, I did expect a larger downside. However, the thing is with Eurodollar, I was sort of 50-50. I was looking for a 50% retracement. So my initial thought process with Eurodollar was it topped out here. I was looking for a 50% retracement, so the downside. And then I was looking to buy at this 50% retracement. We didn't get that, unfortunately. So now I'm looking to capitalize on the next 50% or the next sort of pullback here. So we can see very clearly that we've got some previous structure within this golden zone here. May come down slightly lower just to retest the tops of the candles. Doesn't really matter. That's being pedantic there. So technically it looks fine. We're in a nice H4 bullish trend. The only thing I'm a little bit concerned about is this monthly time frame on Eurodollar. So if we just take a look here, we are at this 200 monthly moving average, which, you know, if you know anything about moving averages, you will know, especially on high time frames, they are very good at acting as dynamic support and resistance. So I'm just a little bit cautious of being the last guy trying to buy, if that makes sense. So if we now have a lot of selling coming in due to this, you don't want to be the guy trying to buy at this 200 resistance. So I'm just keeping that in mind. I do think this market still has power to go higher. It's, again, just a case of being cautious because, again, I don't want to be that guy trying to buy. The other thing is the weekly and the daily look very extended. And again, I'm not saying they can't go higher. I'm just saying they have had a large move. So let's just look at this. So peak to trough, bottom to high. We've had an 11.5% move with no pullback. We had some small consolidation here. There was nothing else. That was it. We've had no pullback. We've broken or smashed past these previous highs. So I am just very cautious that we are due a pullback on Eurodollar. But again, it doesn't mean I'm a bear. I just want to wait for that to happen really before jumping the gun trying to buy. So if we look at what... So if we look here, this is the Elite Traders research. So for anyone that doesn't know, if you go to the Elite Traders website, this is 100% free, by the way. Go to Global Research, click on the most recent one here, which is the 13th of April. You will get this. It's 100% free. It breaks down all of the currencies, commodities, we've got equities, global news, and we've also got trade ideas. So if we just focus on the trade idea here. So we've got Eurodollar reading long. The euro is benefiting from multiple macro tailwinds, rotation out of the US dollar due to fiscal and political uncertainty, improving eurozone data and reducing trade risk following the 90-day tariff pause. In contrast, the US is grappling with deteriorating real yields, fragile confidence in treasuries, and softer inflation. Weakening the dollar's fundamental support, the ECB is on hold with less inflation risk than the US. The EUR continues to be favoured in reallocation flows. And we discuss this quite a lot. If you watch my content, you will hear me talking about capital flows and liquidity flows. And this is a great example. As we see allocations coming, or we see capital getting taken away from the dollar and put into different currencies like the euro. So if we just check the Edge Finder, you can see here the euro dollar is reading as a very bullish bias. So that's great. I mean, you can see the data here. It's actually relatively flat in terms of GDP, manufacturing, retail sales, and inflation. But the general idea behind a euro dollar long is still very fine in my view. The only other concern I've got in terms of a macro view is I think a lot of the euro positivity has already been priced in. So I'm a little bit cautious that euro dollar is just really being driven by dollar weakness and flows into the euro rather than it being the euro, like a macro dominance by the euro. But that doesn't matter if the markets are going to move up. So if we catch something, we catch something, we will see. Now, next up, we do have oil. So again, I'm just following this one very simply off the Edge Finder. I don't really trade oil. The only commodities I really trade are sort of gold and silver. So I've not done much research into oil, which in hindsight, I probably should have done before talking about it. But just on a technical view, it looks quite strong. Again, the Edge Finder is bearish. So if we just follow that bias, looking at the technicals now, we can see we've got a really, really nice potential setup here. With previous lows, we've got the fib level here, obviously meeting previous structure. We've also had this used as resistance previously as well. So if we could get potentially another touch into this zone, along with this 200 moving average coming down on the H4, that would present a very nice technical entry. So yeah, keeping this one very short and sweet, straightforward. We'll see if we can essentially just capitalize on the momentum from oil downside. Now, next up, we have got dollar yen. So I did a live stream actually last week, and we did a bit of a deep dive on some economics. I showed sort of the process that I went through. And something we found on that stream was this, which was quite interesting. By the way, just a quick side note, this is actually a Notion template that is going to be on the Elite Traders website to download pretty soon. I'm just finishing off some slight tweaks and touches, but you can see we've got all sorts of stuff here. So at the moment, I've got a research tab open, where I've got some currency details, but this is what I want to show you. So point 4, net short USD JPY exposure is at record highs. So it means short positions are at record highs. I mean, that's pretty self-explanatory. I don't know why I tried to explain that. This might expose USD JPY to a market squeeze, but prospects for more Bank of Japan tightening, despite the US imposing 24% tariffs on Japan, suggest that any possible USD JPY rebounds towards 150 remain a selling opportunity. And this was by I think it was Mufji. I can't remember. It was from one of the bank reports off the top of my head. I don't have it. Sorry, I'm British. Got to keep a tea by my side. Bear with me. So the technicals behind dollar yen are actually very simple. This might look like a bit of a mess, and that's because it kind of is a bit of a mess. But technicals are actually very simple. So we've got three arrows here, basically just showing what might happen or what could happen here or what I expect. So essentially, any pullback we have, I will look to go short. I think it's a very clear. It doesn't take much more explaining than that. We've got previous structure here. So we had previous support turned resistance. We've got the 200 moving average in a bearish trend. We've got a potential here for a fib golden zone retracement. So yeah, any sort of move to the upside, I will look to be shorting down into this 141 to 140 area. We could even, this looks horrible. We could even adopt a trailing stop on dollar yen. So if anyone's been watching me for a while, you will know that on the yen, I am very, very bullish for the long term. The US dollar is having a bloody bad time at the moment as well. So I think dollar yen shorts could be a huge trade to capitalize on for a longer term position. But obviously, the longer the term of position, the more volatility and sort of whipsawing you're going to have to deal with. So we may be looking to go short. Let me just draw up something. Let's just say, for example, around here, stop loss at the previous highs, and maybe a small take profit. Maybe take 25% of the trade off at like 141, 140, and then just trail stops and let the market run to the downside. So we will have to monitor that. Again, there isn't a solid plan of action with dollar yen. It's more a case of just waiting for that upside rally, then going short and fading that move. So again, on here, on the research, we do have dollar yen reading as a short. Now, just to keep in mind, this isn't my trade ideas. I didn't come up with this. So the way that this works, I've been very open about this. So I will take notes on a Saturday. I will sit down, I'll read Wednesday, Thursday, Friday's bank reports. I will then take all my notes, give it to ChatGPT, and I'll say, put this all together, organize it, and put it into a format that is acceptable for people to read, because it's a bit of a mess when I do it. Then I'll say, use all that information and give me some trade ideas. And this is what it does. So it's all from institutions. It's just obviously interpreted by AI. So please do not take this as gospel. Please do not say, oh, elite traders or James told me to short dollar yen. That isn't the case. This is just a nice confluence based off, again, is institutional research. So dollar yen short, with safe haven flows returning to real US yields falling. Returning and US real real US yields falling. Apologies, brain fart there. The yen is well structured. The yen is well supported. The Bank of Japan is stable, not expected to ease despite the yen's strength. Meanwhile, USD is losing its risk premium as the US macro data softens and Treasury market shows sign of strain. US dollar yen is particularly vulnerable to future shifts in global sentiment. The US Japan policy divergence is narrowing. So we've got a really, really good idea there. We've also got dollar yen here on the edge finder reading as the most bearish under very bearish with a score of -10. So we've got a lot of factors there to really back up this dollar yen short. Excuse me. I'm not going to edit this video. I can't be bothered. I don't have time. So you're going to have to just watch me take some sips of tea now and again. I hope you don't mind. Euro New Zealand. This is another one. Sorry, wrong tab there. Here. So Euro New Zealand is reading bullish. So again, this is a very simple one. It would essentially be following the edge finder and following the momentum of the market. So we can see very clean uptrend recently. We've had a little bit of chop, but of course, with all the tariff stuff going on, that is to be expected. So it's not really a concern. It's more a case of just waiting for somewhere to buy this market. And on face value, the most simple place to buy would be back down at this support level. So stop loss just below this previous low, obviously depending on exactly where you do it, but this would be option 1. Option 2 would be here. So it would just account really for this sort of small consolidation and also the 200 moving average. Depends, how risky you want to play it. So I'd be quite happy to go for a 1-2, 1-1 on this one. I'm still not looking really to hold anything for too long in these markets. I'm quite happy to take a 1-1, 1-2, and just take my money and get out. That's basically still my plan. I've been very vocal about that as well over the past couple of weeks. The pound Australian, this one's in exactly the same situation. So again, if we just take a look over here on the pound Aussie, here bullish reading of 5. So it's not the most convincing idea, which I'm not going to really put much weight on this one just yet. We do have negative COT, so that tells me that the institutions are more short than long, so it doesn't really back this trade idea up too much. But I do like the technicals. It's very similar to the Euro New Zealand trade we just watched. Very clean uptrend, 200 moving average, got a level of support, so it might just be a very simple technical play for, again, a 1-1, 1-1.5, and just playing technicals and getting the money and getting out, really. Next one is dollar Swiss. So dollar Swiss seems like a great play. So again, the dollar is still taking a dive. We're going to get on some technical dollar analysis shortly, but the dollar's still taking a dive. I'm still short-term bullish on the Swiss, as we are still in some slight risk-off markets. Again, we do have the dollar Swiss here on the edge finder reading is very bearish. So again, that's a really nice confluence for us. And we've got the dollar Swiss short idea right here on the Elite Traders website. So the franc is experiencing strong inflows amid global volatility and declining confidence in US fiscal management. The S&B has shown no urgency to intervene despite the currency's appreciation, and with global rates falling, the Swiss's safe haven characteristics are being revalued. US dollar, by contrast, is under structural pressure from twin deficits and reduced yield appeal. So we're going to go into the rates shortly. I'm quite strapped for time, so I can't go into loads and loads of detail on this one. I do really apologize. But yeah, there is some interesting rate probabilities going on right now. So yeah, the US dollar Swiss, again, seems very, very straightforward. We do have the bearish 200 moving average here. We've got a very, very clear trend to the downside. We've had a really strong drop off as well in price recently. So it makes a lot of sense for the market to have a very small pullback and then potentially start coming lower from there. We might get a slightly higher pullback up into these previous highs. Don't know. I don't really care too much. But again, just looking to short any sorts of pullbacks we get on dollar yen, dollar Swiss, same idea essentially. Now, the NASDAQ is interesting because, or actually, I'm going to talk about the NASDAQ and the S&P basically simultaneously because the markets are very similar and it's basically, I'm covering the same topic. I would quite like to go long. I don't really love to short these markets. We've had a really strong rejection here off the 200 weekly moving average on the S&P. We've also got the 90-day pause on tariffs. So I'm not expecting the market to just rally all the way back up to pre-tariff times or pre-tariff prices, but I would expect some sort of relief move. It seems the markets are expected, or sorry, the S&P and the NASDAQ are expected to go up roughly 3 to 4% on market open. But again, it's just what I've heard and seen. I don't know that for a fact. So if we just go to the Edge Finder, have a look at the COT data. You can see here Dow, NASDAQ, the S&P actually isn't here, so maybe just focus on NASDAQ and Dow. But their short contracts have been removed they've removed some short contracts. The NASDAQ had long contracts added. The Dow also had longs removed. Net positioning does still remain bullish. So we can see here 1.3 on the Dow and we've got 24.2 on the NASDAQ. So this doesn't tell me we're going to get a huge reversal. This does look a little bit more like cautious positioning or cautiously bullish positioning for me. So it's something I'm going to keep in mind. Now, what we're going to do is have a look at these rates that I just discussed. So if we have a look at the S&B, you guys, or anyone that's been watching me for a while, will know I was talking about the S&B bringing rates down to possibly zero, maybe even negative rates. And now the probability does seem to be reflecting that here. So just a quick side note, these things are not just on PMT. Anywhere you see central bank probabilities, they'll be essentially proprietary models, essentially. So what they will do is take in different data sets and say this is most likely to happen. But obviously when you get to a point where you're trying to forecast what's going to happen next year or even 6 months down the line, it can be very inaccurate because data changes very quickly in these markets. So don't put too much weight on what I'm showing you. Obviously you really want to focus on sort of the next 1 to 2. But even here, we are seeing negative rates throughout the year on the S&B, which is interesting. But again, it's not something I'm going to put too much weight on just yet. But yeah, keep an eye out on that one. So guys, that is it from me. Again, I do apologize. This has been a little bit of a rushed one. It's not been as in detail as maybe I normally would do. And I apologize to the elite members for not streaming it. But again, I'm really strapped for time, but I wanted to get something out for you. Apologies. I just ended the video and realized I didn't discuss the dollar like I said I would have done. So this is the monthly time frame on the DXY, and it looks very interesting because we've got some really, really clear levels of structure. So you can see here, previous resistance turned support, and the same thing down here, previous resistance turned support. But we do have this monthly trend line. I don't really pay much attention to trend lines, and this one's only been touched twice, so it's not a huge deal, but it is something I'm going to pay attention to. However, with the pressure on the dollar and the amount of negativity, to be quite frank, surrounding the dollar, there's a lot of pressure, and we already know that Donald Trump's sort of narrative around the dollar is he wants it to be cheaper. He wants a lower dollar. So just based on that, I am looking to short the dollar at this point. So I would expect some pullback here, to be quite honest. I mean, this is a long or a strong downside on the monthly. So I'm not saying we're going to get like a full retracement and then down, but some sort of upside would make sense here. And then I'll be looking to short back down into this support. So guys, have a great one. I will see you all very, very soon. Thank you for watching. Drop a like and subscribe. Have a great week. Don't get margin called and stay safe.